Dear students, myself Muninanjappa BM, working as an Vice Principal in S.N.Bhat Degree College and HOD of Commerce in S.N.Bhat PU College. Now let us discuss the first year PUC Accountancy Model Question Paper. Before discussing the question paper, let us know the pattern of the question paper. In part A, you have to attend 8 questions out of 10 which carries 1 mark each. In part B, you have to attend 5 questions out of 8 questions which carries 2 marks each. In part C, you have to attend 4 questions out of 6 questions which carries 6 marks each. In part D, which plays a major role, that is in part D, you have to attend 4 questions out of 7 questions which carries 12 marks each. In part E, that is practical oriented questions, you have to attend 2 questions out of 3 questions which carries 5 marks each. Part A. In part A, you have to answer 8 questions out of 10 which carries 1 mark each. First question, give the meaning of business transaction. Business transaction is an economic activity which involves money or money's worth. Question number 2, expand GAAP, GAAP, generally accepted accounting principles. Question number 3, what do you mean by journal? Journal is a day book where we will record business transactions in a systematical or chronological order. Question number 4, give the meaning of narration. Narration is a brief explanation of journal entry. Question number 5, what do you mean by trial balance? Trial balance is a statement which is prepared before the preparation of final accounts, or it is the blueprint of final accounts to rectify the errors or mistakes, if any. Question number 6, mention any 2 accounting packages. The 2 accounting packages are Tally, MS Excel, ACE. Question number 7, what do you mean by trading account? Trading account is the account which is prepared to calculate gross profit or gross loss by considering direct expenses incurred for the purpose of production. Question number 8, what do you mean by bad debts? The debts which are irrecoverable, which is entered on the debit side of profit or loss account. Question number 9, who is a drawer? Drawer is a person who prepares the bills of exchange. Question number 10, what are the features of single entry system of bookkeeping? It is a book which contains any one aspect, either receiving aspect or giving aspect. Single entry system of bookkeeping is an unscientific method of bookkeeping. Under this system, we can calculate an estimated profit or loss. This system of bookkeeping is not approved by any of the government officials. Part B, you have to answer 5 questions out of 8 which carries 2 marks each. Question number 11, define accounting. Accounting is the process of identifying, classifying, measuring, summarizing, recording and interpreting the business transaction. Question number 12, What do you mean by money measurement concept? Under this concept, each and every business transaction should be measured in terms of money. The major demerit of accountancy is we will ignore the non-monetary transactions and we will enter only monetary transactions. So, it is essential to measure each and every business transactions in terms of money. Question number 13. Give the meaning of subsidiary books with any 4 examples. Subsidiary books are the books which is prepared to enter the similar transaction in a single place. In case of the examples of subsidiary books are purchase book, purchase returns book, sales returns book. Question number 14. What do you mean by cash discount and trade discount? Cash discount is the discount which is allowed for the prompt payment, or it is the discount which is allowed to encourage the prompt payment, or it is the discount which is allowed for the payment which is made before the due date. Whereas cash discount is the discount which is allowed on bulk purchases to encourage or to increase the percentage of sales. Question number 15. What do you mean by cash book with any 2 types? Cash book is the book which is prepared to enter only cash receipts and cash payments. Cash receipts on the debit side, that is left hand side of the cash book, and payments on the right hand side, that is credit side of cash book. The types of cash books are single column cash book, 2 column cash book and 3 column cash book. Question number 16. Define BRS. That is, BRS is nothing but bank reconciliation statement. It is the statement which is prepared to reconcile the cash book and passbook balance. Reconcile is nothing but to compare the cash book and passbook balances. Question number 17. Give the meaning of tailor-made software. It is the software which is prepared to satisfy the requirements of the user, or it is the software which is prepared as per the convenience of the user. Question number 18. What do you mean by depreciation? It is an intangible expenses which is recorded on the debit side of profit or loss account. Depreciation is a permanent and gradual decrease in the value of a fixed asset. Question number 19. Explain the golden rules of accountancy. First one, real account. You have to mention the rule along with any 2 examples. Real account. Debit what comes in, credit what goes out. Examples are cash, machinery, furniture, motor car. See, before knowing the rule of real account, you have to know the meaning of real account. Real account is the account which is related to the things which are visible, which can be touched, which can be felt. These are the real account. That is cash which are visible, machinery which can be felt, which can be seen. So machinery, cash, motor car and furniture. Next, personal account. It is the account which is related to an individual person or an institution framed under government law. Rule: debit the receiver, credit the giver. Example: Mr. Ganesh, Mr. Krishna, Vijaya Bank, Canara Bank, LG Company, Infosys Company. These are the institutions which are framed under government law. Next, nominal account. It is the account which is related to an expenses and incomes. In case of nominal account, debit all expenses and losses, credit all incomes and gains. Example, salary paid, commission paid, salary received, brokerage received, rent received, bad debts, etc. You have to mention 3 golden rules of accountancy, that is real account, nominal account and personal account, along with the rules with any 2 examples. Question number 20, explain the merits of computerized accounting. You have to mention the meaning of computerized accounting. It is the process of performing an accounting activities with the help of computer or electronic device. The merits of computerized accounting are: it is more speedy when compared to manual accounting. The cost of operations are less when compared to manual accounting. We can store more data in computer, that is electronic device. The calculations are conducted automatically without the help of manual. Next, in case of computerized accounting, the other steps, that is in case of manual accounting, we have to prepare manually, that is journal, ledger, trial balance and final accounts. But in case of computerized accounting, the other steps, we have to pass necessary journal entries, but the other steps, that is trial balance and balance sheet, it will be prepared automatically. It is more speedy when compared to manual accounting. Next, in case of computerized accounting, it is an error free. In case of manual accounting, there may be errors or mistakes, but in case of computerized accounting, it is an error free operation. Next, the space consumed by computer is very less, but in case of manual accounting, it requires more space in order to store ledgers and other manual accounting things. Next, the number of members required for performing accounting activities is very less when compared to manual accounting. In case of manual accounting, the accounting activities will be prepared by 2 to 3 members, but in case of manual accounting, a single computer manual, that is computer accountant, can perform an accounting activity which is performed by 3 to 4 manual accountants. So these are all the merits of computerized accounting. Prepare purchase book for the month of May 2013. Before the preparation of purchase book, let us know the meaning of purchase book. It is a type of subsidiary book which is prepared to record only credit purchase of goods, and we have to ignore any cash transactions. In case of purchase book, let us know the format, that is date, particulars, inward invoice number, ledger folio, details column and amount column. Question number 15. Before preparing any account, first we have to write in whose book we are preparing and the date of preparation, that is in the books of, they had not given any name, dash, for the month of May 2013. We are preparing purchase book. First transaction, that is 1st May 2013, goods purchased from Suryavamshi, rupees 8,000. It is a credit transaction, so it has to be recorded, that is goods purchased from Suryavamshi, that is first transaction, rupees 8,000. Second transaction, 9th May 2013, goods purchased from Shrikant, rupees 5,000 at a discount of 10%. In case of purchase book or subsidiary books, we have to consider only trade discount and ignore cash discount. Goods purchased from Shrikant, rupees 5,000. Trade discount, it has to be deducted, that is at 10%. 5,000 into 10%, 500, it comes to rupees 4,500. Transaction number 3, that is 15th May 2013, goods purchased from Rayanna Traders. It is a credit transaction, it has to be recorded. Goods purchased from Rayanna Traders, rupees 4,000. Next transaction, that is 20th of May 2013, goods purchased from Suresh and Company for cash, rupees 5,000. See, the transaction is goods purchased from Suresh and company for cash. It is a cash transaction, so it has to be ignored. We should not record the cash transaction in the subsidiary books. Next transaction, 26th May 2013, goods purchased from Mr. Xavier. It is a credit transaction. It has to be recorded. Goods purchased from Mr. Xavier. That is fourth transaction, 3,900. The total of all credit transaction comes to 20,400. That is total credit purchases 20,400. That's it. Classify the following into real account, personal account and nominal account. In case of first transaction, first one, Mr. Kiran, it is a personal account. Next, buildings, it is a real account. Sales, it can be considered as a real account and nominal account also because it is an income. Next, bad debts, it is a nominal account. Intangible expenses. Next, goodwill. Goodwill is nothing but the reputation which is measured in terms of money. It is a real account. Next, rent, it is an expenses, nominal account. Next, salary, it is an expenses, nominal account. Next, purchases, it can be considered as real account and nominal account. Prepare trial balance from the information given below. Before the preparation of trial balance, let us know the meaning of trial balance and what is the format. Trial balance is a statement, it is not an account, it is a statement which is prepared before the preparation of final account in order to rectify the errors or mistakes if any. In case of trial balance, serial number, name of the ledger account, ledger folio, debit, credit. In case of debit, it includes drawings, all expenses and asset balance. In case of credit column, it includes capital, liability balances and all incomes. In case of trial balance, question number 17, capital 96,000, it has to be entered on the credit side of trial balance. Purchases, it is an expenses, so it has to be recorded on the debit side of trial balance. Return outwards means purchase returns. We have purchased and we are returning due to shortage or due to wastages or damages, so we are returning it to the supplier. It has to be entered on the credit side of trial balance. Carriage, it is an expenses, it is a nominal account, it has to be entered on the debit side of trial balance. Stock, it is an asset, it has to be recorded on the debit side of trial balance. Sales, we are selling the goods and we are earning some amount of profit, so it has to be entered on the credit side of trial balance, it is an income. Discount received, we are receiving or we are gaining the discount, so it has to be recorded on the credit side of trial balance. Bank balance, it is an asset, it has to be recorded on the debit side of trial balance. Furniture, it is an asset, it has to be recorded on the debit side of trial balance. Return inwards, we are receiving the goods from the customer due to shortage or damage or to some other problems, so it has to be recorded on the debit side. The total comes to 1,91,240 on the both the sides of the trial balance. If it tallies, then you can get 6 out of 6. Prepare personal account of Mr. Pranesh for the month of September 2016. Personal account is the account which is related to an individual person or an institution which is framed under government law. The golden rule of personal account is debit the receiver, credit the giver. In case of question number 17, they had given debit balance rupees 20,000. Debit, that is left hand side of the account, to balance brought down 20,000. Next, 6th of September, they had given goods purchased from Mr. Pranesh rupees 25,000. Journal entry for that, purchases account data to Pranesh account. In Pranesh account, it has to be credited, that is by purchases 25,000. Next transaction, that is 11th of September, they had given goods sold to Pranesh. Entry, Pranesh account data to sales account. In Pranesh account, sales has to be debited, that is to sales rupees 5,000. On 15th of September, that is goods sold to Pranesh on credit. On credit means that is Pranesh account data to sales account. In case of Pranesh account, it has to be debited, that is to sales 18,000. 21st of September, cash paid to Pranesh. Cash paid, that is debit the receiver. Pranesh account data to cash account. In Pranesh account, cash has to be debited to cash 10,000. In personal account, it has to be balanced. On the credit side of Pranesh account, the total comes to rupees 53,000. On the debit side, it comes to rupees 25,000. It has to be balanced, that is 53,000 minus 25,000. The balance has to be written as balance carried down, that is 28,000 balancing amount. That is on the month ending date, that is 30th of September 2016, by balance carried down 28,000. Next month beginning, that is 1st October 2016, it has to be brought down, to balance brought down 28,000. See carefully, at the end of the account, it has to be balanced. The greater value has to be mentioned, that is 53,000. 53,000 minus 25,000, it comes to rupees 28,000. Next, it has to be brought down. Prepare simple petty cash book from the information given below. First, we have to write in the books of, they had not given any name, so dash as on month ending date 30th April 1995. Petty cash book. The format for simple petty cash book is amount received from the cashier or amount received from the chief cashier, CBF, that is cash book folio, date, particulars, voucher number, ledger folio, amount. Transaction number 1, on 1st April 1995, check received from cashier rupees 200. That is, they had given check received from cashier, so to bank, that is rupees 200. See, to bank. For the remaining transaction, that is for amount spent, we have to write by. Please imagine the cash book, that is for amount received. Cash book is on real account. Debit what comes in, credit what goes out. On the left hand side, that is debit side, we will write to bank, to cash, to sales. That is on the debit side, we have to write to, that is for incoming. On the credit side, for expenses, we have to write by purchases, by furniture purchased, by salary paid, by wages paid. That is for the amount spent, that is credit what goes out. Follow the same rules here. That is for incoming, that is cash received, we have to write to bank, that is check received to bank rupees 200. For amount spent, we have to write by. On 4th of April, telephone bill paid rupees 15. By telephone bill paid rupees 15. On 7th of April, taxi hire paid. By taxi hire paid rupees 20. On 10th of April, stationery purchases. By stationery rupees 25. On 14th of February, refreshment to customer. It is an expenses. So by refreshment to customer rupees 18. On 16th of April, auto hire paid. By auto hire rupees 10. On 19th of April, office files and papers, that is, it can be also recorded as stationery, rupees 15. 24th of April, carriage on parcel, it is an expenses, so it has to be recorded as by carriage on parcel, rupees 12. 25th of April, advertisement expenses paid. By advertisement, rupees 10. On 28th of April, office cleaning expenses, rupees 11. The total of all expenses comes to rupees 136. Out of rupees 200, the petty cashier had spent rupees 136. The balance is rupees 64. That is, on the month ending date 30th of April 1995, by balance carried down 64. On the next month beginning, that is 1st May 1995, that is to balance brought down 64. It has to be brought down. See carefully. The total amount received from chief cashier rupees 200. The total amount spent by the petty cashier rupees 136. That is total of all expenses rupees 136. Balance is rupees 64. That is carried down and balance brought down rupees 64. Pass necessary journal entries in the books of Hitesh for the year ending 31st December 2012. Before preparation of journal entry, meaning of journal. Journal is a day book where we will record each and every business transactions in a chronological or ascending order. The format of journal entry is date, particulars, ledger folio, debit, credit. The first transaction is commenced business with cash. Cash is a real account, that is debit what comes in, credit what goes out. That is cash is incoming for the business entity, so it has to be debited. That is cash account data to capital account rupees 75,000. Narration being commenced business with cash. Second transaction, that is 2nd December 2012, goods purchased. Goods is a real account and cash is also a real account. As per the real account, debit what comes in, credit what goes out. That is goods is incoming, that is purchases account data to cash account being goods purchased for cash. Next transaction on 4th of December, that is cash deposited into bank. We are depositing the cash into bank, that is bank is a personal account. Bank, as per the personal account, debit the receiver, credit the giver. Bank is receiving the cash, so it has to be debited. That is bank account data to cash account being cash deposited into bank rupees 20,000. Next transaction on 7th of December, wages paid. Wages is a nominal account. As per the nominal account, debit all expenses and losses. Wages is wages paid, that is it is an expenses, so it has to be debited. That is wages account data to cash account being wages paid rupees 3,200. Next transaction, that is goods sold for cash on 10th of December. Goods sold, that is we are selling the goods and we are receiving the cash. Both are real account. As per the real account, debit what comes in, credit what goes out. While selling the goods, we will receive the cash, so it has to be debited. That is cash account data to sales account being goods sold for cash rupees 15,000. Next transaction, that is on 12th of December, machinery purchased from HMT Limited. We are purchasing the asset, that is tangible asset, machinery. Machinery is incoming, it is a real account, it is incoming, so it has to be debited. And HMT Limited is a personal account. As per the personal account, debit the receiver, credit the giver. So HMT Limited is a giver, it has to be credited. Machinery account data to HMT Company Limited account rupees 12,000 being machinery purchased from HMT Limited for cash. Next, rent paid by check. We are paying the rent. Rent is a nominal account. Debit all expenses and losses, credit all incomes and gains. Rent is a nominal account, so it has to be debited. Rent we are paying, it is an expenses. So, and we are paying by check. Check means bank will be the giver, so it has to be credited. Rent account data to bank account rupees 3,500 being rent paid by check. On 18th of December, cash paid to Swati rupees 19,000. in full settlement of rupees 20,000. We are paying cash to Swati rupees 19,000 instead of paying rupees 20,000. We are paying rupees 1,000 less. It is treated as an income for us. So it is a discount received. Swati is a personal account. So debit the receiver. It has to be debited. So Swati account debtor rupees 20,000 on the debit column. 2. Discount received. It is an income. So it has to be credited. Rupees 1,000 on the credit column. And 2 cash. That is, we are paying the cash. It is an outgoing. So it has to be credited. 2 cash on the credit column. That is rupees 19,000. Being, it is a contra entry. Being cash paid to Swati rupees 19,000 in full settlement of rupees 20,000. Next, withdrawn cash for personal purpose on 25th of December. Withdrawn for personal purpose means it is a drawing. Any amount which has been withdrawn by the proprietor for personal purpose or residential purpose or domestic purpose, it should be treated as drawings. So drawings, it has to be debited. Drawings account debtor to cash account rupees 2,000. Being cash withdrawn for personal purpose. On 24th of December, we are receiving the cash from Mr. Raju rupees 35,500 and allowing a discount of rupees 1,500. That is, Raju has to pay rupees 35,500, but he is paying rupees 34,000. We are allowing a discount of rupees 1,500. We are allowing a discount means it is an expenses. As per the nominal account, all expenses has to be debited. And we are receiving the cash. It is an incoming, so it has to be debited. Cash account debtor rupees 34,000. Discount allowed rupees 1,400. To Raju account 35,500. It has to be credited. Debit the receiver, credit the giver. So Raju has to be credited. See once again. We are receiving the cash. Cash account debtor 35,000 on the debit column. Discount allowed 1,500 on the debit column. To Raju 35,500 on the credit column. Being cash received from Mr. Raju 34,000 in full settlement of rupees 35,500. It is also an contra entry. Next, salary paid on 27th. We are paying the salary. We are paying the salary means it is an expenses. So it has to be debited as per the nominal account. Debit all expenses and losses. Credit all incomes and gains. That is salary account debtor to cash account. Being salary paid. Next transaction on 30th of December. Commission received. Commission received means it is an income. So commission has to be credited and we are receiving the cash. It has to be debited. Cash account debtor to commission received account rupees 1,800. Being commission received. We have to total both debit and credit column. The total of each and every transaction comes to rupees 2,32,000 on the both the sides of the journal entry. So this is about the journal entry. It is the first and primary step in the accounting process. In the accounting cycle also, first business transaction, next we have to prepare the journal entry. It is the most important concept. Prepare sales book and sales returns book, that is subsidiary books. First let us know the meaning of sales book and sales returns book. Sales book means it is a book where we will record only credit sale of goods and we will ignore cash sales. Sales returns book is a book where we will record the goods returned from the customer due to shortage, due to damage, due to some any other expiry of the manufacturer goods or some other reasons customer may return the goods. So that particulars, that transaction should be recorded in the sales returns book. In the problem, they had given goods sold to Mr. Desai and Sons on 1st November 2017, rupees 5,500. See here, goods sold to Desai and Sons. It is not a cash transaction, it is a credit transaction. So it has to be entered in the cash book, that is, sales book, that is goods sold to Desai and Sons, rupees 5,500. Sales means it is an outward. So in the format we have to write outward invoice number. Next transaction, supplied goods rupees 14,000 to Kirti stores on account. On account means it is a credit transaction. We are selling the goods to Kirti stores on credit. On credit means it is an sales book transaction, so it has to be recorded, that is on. In the date column we have to record 5th November 2017. In particulars column, goods supplied to Kirti stores. In the amount column, 14,000. Next transaction, that is on 8th November, damaged goods received from Desai and Sons. See, on the 1st of November, we had sold goods to Desai. Goods worth rupees 5,500. But due to damage, they are returning the goods, that is sales returns. We have to enter it in the sales returns book, that is in the sales returns book format is date, particulars, credit note number, ledger folio amount. So say in sales returns book on 8th November 2017, damaged goods from Desai and Sons, rupees 500. Next transaction on 10th November 2012, credit sale of goods to Desai and Sons. We are selling the goods to Desai on credit. On credit means it has to be recorded in the sales book, that is on 10th November 2012, Desai and Sons, rupees 9,000. Next on 15th November 2012, sold goods to Rahman and Sons, rupees 6,000 at a discount of 11%. Say, in case of sales book, we have to consider only trade discount. We have to ignore cash discount. So, in the sales book, we have to record goods sold to Rahman and Sons, rupees 6,000 minus trade discount, that is at 11%. 6,000 into 11%, it comes to rupees 660. Out of it has to be deducted, and the balance is rupees 5,340. It has to be entered in the amount column. See, we have to deduct only trade discount and ignore cash discount. Next transaction, that is on 18th November 2012, claimed allowances by Kirti stores for overpricing rupees 500. See, we had sold goods to Kirti stores, but they had returned goods. They are claiming for damage, or they are claiming for overpricing of rupees 500. It has to be entered in the sales returns book, that is dated 18th November 2012. Claim from Kirti stores for overprice rupees 500 in the amount column. Next on 23rd of November, sold office furniture for Rajesh on credit. See, in case of sales book, we have to consider only credit sale of goods, but not any asset. Here they had given credit sale of furniture. It is an asset, so the transaction has to be ignored in the sales book and sales returns book. Keep in mind, sales book is a book where we have to record only credit sale of goods, but not any cash sales and any credit purchase of assets or sale of assets. Next transaction on 25th of November 2012, Lalita stores bought goods from us. See, Lalita stores bought goods from us. They had purchased. For them, it is an purchases means for us, it is an sales. So, it has to be recorded in the sales book. Sold goods to Lalita and stores, rupees 3,500. Next transaction on 27th sent a credit note to Lalita and Sons for short supply. See, they are claiming a credit note. They are claiming for shortage of supply, that is rupees 1500. They are claiming means it has to be recorded in the sales book. That is, in the sales book, Lalita and stores for shortage rupees 1500. Next transaction, Rahman bought goods from us on credit rupees 24,000. Rahman purchased goods from us. Bought goods from us means it is an purchases for him, but it is an sales for us. So it has to be entered in the sales book. Goods sold to Rahman rupees 24,000. The total of all credit sales comes to rupees 45,440. The total of all credit sales after deducting trade discount, the total comes to 45,440, and the total of all credit sales including credit note, claim for shortage, claim for allowances, claim for any other overpricing or short supply, the total of all these sales returns comes to rupees 2,500. See, sales book and sales returns book. After preparing this, you have to prepare ledger balances. That is ledger accounts. For subsidiary books, we have to prepare ledger accounts, related ledger accounts. In this problem, we have to prepare ledger accounts of Desai and Sons, Kirti Stores, Rahman and Lalita account. In Desai account, on 1st November 2017, we had sold goods to Desai and Sons. So, two sales, rupees 5,500. And on 10th November, we had sold goods to Desai of rupees 9,000. On 8th of November, he had returned goods of worth rupees 500. No need to balance any carried down or brought down. Just we have to record the similar transaction in a single account. That is sales on the debit side and sales returns on the credit side of Desai account. Next, Kirti Stores. We had sold goods to Kirti Stores on 5th of November. So it has to be debited. That is goods sold to Kirti Stores. Kirti Stores account data to sales account. In Kirti Stores account, sales has to be debited worth rupees 14,000. And they had returned goods. That is, it has to be credited. Returned goods means sales returns account data to Kirti Stores account. So it has to be credited by sales return 500. Next, in case of Rahman account, we had goods sold on 15th of November. That is two sales, rupees 5,340 after deducting trade discount at 11%. Out of 6,000, we had deducted 660. It comes to rupees 5,340. It has to be debited. On 29th of November, again we had sold goods to Rahman worth rupees 8,100. No need to total and balance. Next, Lalita account. Lalita account, we had sold goods on 25th of November. Sales has to be debited. Two sales, 3,500, and sales returns on 27th of November. It has to be credited. Prepare bank reconciliation statement from the information given below. Bank reconciliation statement. It is a statement which is prepared to reconcile the cash book balance with that of the passbook balance. Reconcile is nothing but it is the process of comparing. In the problem, they had given bank balance as per cash book. If they give bank balance as per cash book, then we have to keep in mind, if the transaction which leads to the increase in passbook balance should be added, and the transaction which leads to the increase in cash book balance has to be deducted. I will repeat once again. the transaction which leads to the increase in passbook balance should be added, and the transaction which leads to the increase in cash book balance should be deducted. In the problem they had given bank balance as per cash book. It has to be entered on the second column, that is outer column. First transaction they had given out of the checks amounting to rupees 3,200 deposited into bank, but a check of rupees 1,500 has been credited. I will repeat once again. Out of the checks deposited rupees 3,200, a check of rupees 1,500 has been credited. See, they had deposited 3,200, but only they had credited 1,500. There is a difference of rupees 1,700. There is an increase in the cash book balance, so the balance amount 1,700 has to be deducted. 3,200 minus 1,500, 1,700 has to be deducted. Next, out of the checks amounting to rupees 2,600, a check of rupees 2,000 only has been presented for payment. Once again, a check of rupees 2,600 has been issued, but a check of rupees 2,000 has been presented for payment. See, there is a difference of rupees 600. We had deducted rupees 2,600 from cash book, but the person who had received the check has presented only a check of rupees 2,000. There is a difference of 600. There is an increase in passbook balance, so it has to be added. 2,600 minus 200, 600. Next, there was a credit of rupees 1,000 for dividend. See, there is a credit of rupees 100 in the passbook. If there is a credit, then automatically passbook balance will increase. Therefore, it has to be added to dividend rupees 100. Next, rupees 200 for life insurance has been deducted. They had deducted rupees 200 for life insurance premium as per the standing instruction. See, if they had deducted rupees 200 from the passbook, then the passbook balance will decrease. So, the transaction which leads to the decrease in passbook balance has to be deducted. So, 200 has to be deducted. Next transaction, there was a debit of rupees 550 for bank charges. Bank charges means it is related to bank. That is, there will be a corresponding entry in the passbook. 50 has been deducted or debited. Debited or deducted means passbook balance will decrease. So, the transaction which leads to a decrease in passbook balance has to be deducted rupees 50. Next transaction, rupees 150 interest has been credited, but there is no any corresponding entry in the cash book. See, an interest has been credited in the passbook, but there is no any entry in the cash book. If there is a credit in the passbook, means automatically passbook balance will increase. If the passbook balance is more, then that particular transaction has to be added. So, we have to add rupees 150 as interest. See, in the beginning they had given bank balance as per cash book rupees 8,000. The total of all transaction which leads to the increase in passbook balance, that is rupees 600, 2,600 minus 2,600, next rupees 150. Total comes to rupees 750 has to be added, that is 8,000 plus 750, 8,750, and the transaction which leads to the decrease in passbook balance has to be deducted, that is 1,700, 3,200 minus 1,500, 1,700 difference amount, next 200 and 150. The total of all transaction comes to rupees 2,050. 8,750 minus 2,050 will be rupees 6,700. That is bank balance as per passbook. This is the important chapter and the important concept which has to be concentrated by each and every commerce student, because even after the completion of degree or master degree, in interview they will ask, that is BRS, bank reconciliation statement, which is the most important for each and every commerce student. Question number 24, which is related to bills of exchange. Lakshman received a bill for rupees 500 for a period of 3 months on 10th April 2001. This bill has been endorsed to Mr. Bharat. The endorsee sent a bill for collection. On the due date, the bill has been dishonored and the noting charges has been charged of rupees 200 and the charges for bill collection is rupees 100. Pass necessary journal entries. Before the preparation of bills of exchange or before passing the necessary journal entries in the three parties, first we have to know the meaning of endorsement. Endorsement is the process of transferring the financial instrument, that is the check, to the third party. For the check transaction, there will be two parties, that is the check receiver and the check giver. But if the check, the same check has been transferred to the third party, then he is known as the endorsee, or that process is known as endorsement. See, in this transaction, Mr. Lakshman has drawn a bill for rupees 5,000 on Mr. Raman on 10th of April 2001 for a period of 3 months. But Mr. Ram has transferred the same check to Mr. Bharat, the endorsee. Mr. Bharat had sent the check for the collection on the due date, that is after a period of 3 months, but the check has been dishonored. So for that, he has the check and check giver has to pay noting charges of rupees 200 and noting charges of rupees 200 and collection charges of rupees 100. First, let us pass necessary journal entries in each and every party's account. First, in the books of Mr. Lakshman. Mr. Lakshman has drawn a bill, that is, has accepted the bill, that is, bills receivable account data to Mr. Ram account. Mr. Ram is the acceptor, Mr. Lakshman is the bill drawer. So, bills receivable account data to Mr. Ram account, that is rupees 5,000, being bill drawn on Mr. Ram. The second entry is endorsement of check. He is not accepting or is not drawing the check on the due date or the maturity date. The same check has been endorsed to Mr. Bharat. Bharat is the receiver. So, entry will be Bharat account data to bills receivable account rupees 5,000 on the same date. After a period of 3 months and an extra 3 days, that is grace period, 10th of April, May, June and July, that is 10th of July plus grace period of 3 days, that is 13th July 2001. Mr. Ram, account data, he had presented the check for payment, that is Ram account data to Bharat account. Here, Mr. Ram is paying rupees 200 to Mr. Bharat, that is a noting charges. Noting charges is an fees paid to the notary for noting the noting. It is known as noting charges. It is the fees paid to notary for noting. So here Mr. Ram has to pay rupees 5,200, that is 5,000 bill amount plus 200 noting charges, that is Ram account data to Mr. Bharat account, being bill dishonored and noting charges has been paid by Mr. Ram. That is in the books of Mr. Lakshman. See, first entry will be bill drawn, that is bills receivable account data to Mr. Ram account. Second entry, endorsement, that is Mr. Bharat account data to bills receivable account, endorsement of check. Third one, presentation of check, that is Mr. Ram account data to Mr. Bharat account 5,200, which includes a noting charges of rupees 200. It is a standard amount. Next, in the books of Mr. Ram, that is the second party. Here, Mr. Lakshman, he has drawn the bill, that is Lakshman account data to bills payable account rupees 500. Here, Mr. Ram is the second party, rupees 5,000. Next, that is on 13th July, bills payable account data, noting charges account data to bills receivable account. Here, see, bills payable, he has to pay rupees 5,000. In addition to that, he has to pay rupees 200, that is noting charges. And in the total of both, that is 5,000 plus 200 comes to rupees 5,200. That is being bill endorsed to Mr. Bharat, including, and he has to pay a noting charges of rupees 200. That is two entries in the books of Mr. Ram. That is Lakshman account data to bills payable account. Next, bills payable account data, noting charges account data to bills receivable account. Next, in the third party's account, that is the endorsee, that is the Bharat, Mr. Bharat is the third party for the bills of exchange. So here he will receive the bill from Mr. Ram. So entry will be bills receivable account data to Mr. Ram on 10th of April, rupees 5,000. Second entry will be he will send the bill for collection, that is on the maturity period, that is 13th of July 2001. Bills sent for collection account data to bills receivable account. See here, bills sent to bank for collection account data to bills receivable account 5,000. But bill has not been honored, it has been dishonored. On 13th July, we have to pass another entry, that is Lakshman account, the person who has drawn the bill, who had given the financial instrument, that is Mr. Lakshman, Lakshman account data to bills sent to bank for collection account to bank account. Here Lakshman has to pay rupees 200 in addition to the bill amount, that is 5,000 plus 200 noting charges 5,200. That is Lakshman account data to bills sent to bank for collection account to bank account. Being bills sent to bank for collection dishonored and noting charges paid. The last entry in the books of Mr. Bharat is collection of bank charges, that is collection charges account data to bank account. That is collection charges is an expense, so it has to be debited. Collection charges account data to bank account rupees 100. These are the four entries which has to be passed in the books of Mr. Bharat. That is first one, he will receive the bills of exchange, bills receivable account data to Mr. Ram account rupees 5,000. Second one, bills sent to bank for collection account data to bills receivable account, that is on the maturity period, that is 5,000. Next entry, bill has been dishonored. So entry will be Lakshman account data to bills sent to bank for collection account to bank account, that is 5,200 has to be debited, and in the credit column bills sent to bank for collection 5,000 and to bank 200. The last entry will be collection charges account data to bank account 1,000. This is the bills of exchange in three parties account, that is Mr. Lakshman, drawer, drawee, that is Mr. Ram, and endorsee, Mr. Bharat. Next question, prepare 3-column cash book. In order to prepare 3-column cash book, it is a book which contains cash column, discount column and bank column. Here see the format: date, particulars, receipt number, ledger folio, discount column, cash and bank column. In the same way, we have to enter date, particulars, voucher number on the right hand side, next ledger folio, discount, cash and bank column. It is based on real account. Debit what comes in, credit what goes out. Let us see the transaction, that is opening balance on 1st August 2010. Opening balance, that is debit balance, two balance brought down, that is cash 15,000 and bank 20,000. No need to write any narration. Next, on 4th of August, goods sold. Just they had given goods sold, so two sales, that is we have to enter it in the cash column. If they provide, that is goods sold and received by check, then it has to be entered in the bank column. Here they had given only goods sold, so we have to enter it in the cash column. Next, on 5th of August, they had given furniture purchased and paid by check. Here we are purchasing the furniture and we have to pay the cash to bank. So furniture, buy furniture, we have to enter it in the bank column. Next, on 8th of August, commission received. They had given commission received. It is an income, so it has to be entered in the debit side of cash, 3-column cash book. To commission, that is being commission received, we have to enter it in the cash column. Next, on 10th of August, cash paid to Suresh rupees 12,000 in full settlement of rupees 12,000. See here, see carefully. Cash paid to Suresh rupees 12,000 in full settlement of rupees 12,000. There is no any discount. There is no any difference between payable and paid. So there is no any discount. By Suresh, enter it in the cash column, being paid to Suresh. Next, 14th, cash received from Mr. Raju rupees 15,000 in full settlement of rupees 15,300. Here see, the receivable is rupees 15,300 and we had received 15,000. The difference between receivable and received is rupees 300. It has to be entered it in the discount column and remaining 15,000 in the cash column, being received from Raju. Next, on 15th of August, cash deposited into bank. It is a contra entry. Journal entry will be bank account data to cash account. Bank account by bank, we have to enter it as C in the ledger folio column, that is contra, 5,000 in the cash column. In the same way, 15th August, to cash, that is in the bank column. See, if you enter by bank, it has to be entered in the cash column. If you write to cash, it has to be entered it in the bank column. That is, it is a contra entry. It has to be entered on the both the sides of the cash book. Next, on 17th, check received from Mr. Ashwath. Check received from Mr. Ashwath rupees 13,000 in full settlement of rupees 13,500. Here, say they had received only check, but it has not been deposited into bank. So it has to be entered in the cash column itself. That is 13,000 in full settlement of rupees 13,500. The difference between receivable and received is rupees 500. It has to be entered it in the discount column, being check received from Mr. Ashwath. Next, on 20th, salary and wages paid. Salary and wages, it is an expense, so it has to be entered it in the cash column. By salary and wages, 3,000 in the cash column. Next, on 25th, rent received, it is an income, so it has to be entered it in the debit column, that is to rent, cash column. Next, on 28th, being withdrawn from bank for personal purpose. Personal purpose means it is a drawing, so by drawings we have to enter it in the bank column, being withdrawn from bank for personal purpose. Next, on 29th, insurance paid. Insurance paid means it is an outgoing, so by insurance 2,000 in the cash column. Next, on 30th, paid to Rajesh by check. Rajesh is a receiver, so we are paying outgoing by Rajesh. We have to enter it in the bank column, 6,000. Next, on 31st, cash withdrawn from bank for office purpose. It is a contra entry. We are withdrawing cash from bank for office purpose, that is cash account data to bank account, that is by cash in the bank column, to bank in the cash column. It is a contra entry. we have to write C in the ledger folio column. Next, that's it. It has to be balanced. No need to balance. Discount column. See here, 800. There is no any amount. Next, in the cash column, we have to total all these transactions. It comes to rupees 73,000. 73,000 minus credit transaction. It comes to rupees 51,000. Next, total of bank transactions 25,000 minus 22,000. It comes to rupees 3,000. It is an balance carried down on the month ending, that is 31st of August. Next, balance brought down on next month beginning 1st September 2010. Two balance brought down 51,000 and 3,000. Prepare final accounts from the information given below for the year ending 31st March 2010. Before the preparation of final account, let us know the meaning of final account. It is the account which is prepared on the year ending date to calculate profit or loss and financial position of the concern. In order to calculate profit or loss, we have to prepare two accounts, namely trading account and profit or loss account. In order to know the financial position of the concern, we have to prepare a statement known as balance sheet. It is a statement which is prepared to know the financial position of the concern, or it is a list of assets and liabilities. Before the preparation of final account, we have to mark the transaction in which they have to appear. The transactions which are given in the trial balance should appear once either in trading account or profit or loss account or in balance sheet. But the transactions which are given in the adjustment should appear twice, once in trading account or profit or loss account and once compulsorily in balance sheet. First we have to mark in which account or statement it has to appear. First, capital and drawings. Capital, it has to appear in balance sheet, and drawings, it has to appear in balance sheet. Next, plant and machinery, it is an asset, so it has to appear on the asset side of balance sheet. Next, debtors and creditors. Debtors is an asset, so it has to appear on the asset side of balance sheet, and creditors it is an liability, it has to appear on the liability side of balance sheet. Next, purchases and sales. It is a direct expenses and income, so it has to appear in the trading account. Mark it as trading account, T. Next, returns, that is purchase returns and sales returns, it has to appear in the trading account. Next, wages, it is a direct expenses, so it has to appear in the trading account. Next, cash in hand and cash at bank. These are the current assets which has to appear on the asset side of balance sheet. Next, salary, it is an indirect expenses, so it has to appear in the profit or loss account. Mark it as profit or loss account. Next, repairs, it is an indirect expenses, it has to appear in the profit or loss account on the debit side, it is an expenses. Next, rent, it is an indirect expenses, it has to appear in the profit or loss account. Next, stock, any stock which is given in the trial balance should appear in the trading account, it is an opening stock. Mark it as trading account. Next, miscellaneous expenses, any miscellaneous expenses, sundry expenses, general expenses, it has to appear in the profit or loss account. Next, bills receivable, it is a current asset, so it has to appear in the balance sheet. Mark it as balance sheet. Next, bad debts, it is an expenses, it is a loss, it has to appear in the profit or loss account. Reserve for bad debts, that is provision for bad debts, it is an old reserve, so it has to appear in the balance sheet. Next, carriage outwards, it is an indirect expenses, it has to appear in the balance sheet, sorry, it has to appear in the profit or loss account. Any transactions which are given in the trial balance should appear once either in trading account or profit or loss account or balance sheet. But the adjustments should appear twice, once in trading account or profit or loss account and once compulsorily in balance sheet. Let us see the adjustment number 1, that is closing stock. It has to appear in trading account and balance sheet. Adjustment number 2, that is prepaid rent. It is related to rent. It is an indirect expenses. So it has to appear in the profit or loss account and balance sheet. Next, make a provision for bad debts related to debtors. It is an indirect expenses. We are creating a reserve for bad debts. It has to appear in the profit or loss account and balance sheet. Next, appreciation on plant and machinery. It is an income. It has to appear on the credit side of profit or loss account and balance sheet. Next, that is interest on capital. It is an expenses, so it has to appear in the profit or loss account and balance sheet. Let us prepare the accounts. Before the preparation of account, we have to write in the books of, they had not given any name, so dash as on 31st March 2010. Step 1, trading and profit or loss account. Trading account and profit or loss account are based on nominal account. Nominal account says that debit all expenses and losses, credit all incomes and gains. So each and every expenses has to enter on the debit side, that is left hand side of the account, and income on the credit side of trading account. So first one we have to write the opening stock. Opening stock amounted to rupees 20,000. Next, purchases 80,000. Purchase returns, which is given in the on the credit side of the trial balance, that is 5,000. 80,000 minus 5,000, 75,000. Next, we have to enter, that is sales 1,40,000, which is given in the given on the credit side of trial balance 1,40,000 minus returns, which is given in the debit side of trial balance, that is 1,40,000 minus 40, 1,36,000. Closing stock given in the adjustment, that is 40,000. Next, wages, that is direct expenses 15,000. That is 1,36,000 plus 40,000, 1,76,000 minus direct expenses comes to 66,000. That is gross profit, that is balancing amount. It is the result of trading account. Next, we have to continue it in the profit or loss account. Carry down, the same amount has to be brought down in the profit or loss account, 66,000. Next, salary 10,000. Repairs 4,000. Rent 4,500. They had given a rent prepaid, that is any expenses which is paid in advance has to be deducted, that is 4,500 minus 500 comes to rupees 4,000. Miscellaneous expenses 5,000. Next, it is the important adjustment, that is bad debts given on the debit side of trial balance 1,000 plus new reserve given in the adjustment, that is new reserve, that is provision for bad debts. Debtors amounted to rupees 40,000 into 5% comes to rupees 2,000. 1,000 plus 2,000, 3,000 minus old reserve, that is given on the credit side of trial balance, that is 1,500. 3,000 minus 1,500, 1,500 on the outer column. Next, carriage outwards 2,000. Interest on capital, that is given in the adjustment, that is it has to be calculated on the basis of capital. 1,81,000 into 5% comes to 4,050. Next, appreciation on plant and machinery, which has to be entered on the credit side because it is an income. Appreciation on plant and machinery 60,000 into 10%, 6,000. The total of all incomes comes to 66,000 plus 6,000, that is 72,000. We have to deduct this all indirect expenses. The net profit, that is the balancing amount, will be 41,450. This is the result of profit or loss account. In order to calculate this net profit, we have to prepare both trading account and profit or loss account. Step 2, balance sheet. The format of balance sheet: liabilities amount, assets amount. We have to draw two columns, that is inner column and outer column. On the liability side, first we have to write the capital adjustment, that is capital, which is given on the credit side of trial balance, plus interest on capital if they are given in the adjustment. Next, net profit, the result of profit or loss account. We have to enter, that is 81,000 capital, interest on capital at 5%, 4,050 plus net profit 41,450. Total comes to 1,26,500 minus drawings, that is which is given on the debit side of trial balance. Interest on drawings they had not given. Net loss, we had earned a profit, so there is no any net loss. 1,26,500 minus 10,000 comes to 1,16,500. Next, while entering on the liability side, just we have to concentrate on the credit side of trial balance. See, on the credit side of trial balance, first one, capital we had entered. Next, that is creditors 45,000. There is no any adjustment, so it has to be directly entered on the outer column of the balance sheet, 45,000. Next, sales 1,40,000. It had been entered in the sales trading account. Next, returns, it has also entered. Last one, that is provision for bad debts, we had taken in the profit or loss account. So we had entered each and every transaction on the liability side. Next, coming on the asset side of balance sheet, first one, preferably it is advised to enter any cash, that is cash in hand or cash at bank. Cash in hand 1,000, cash at bank 6,000. Next, debtors, there is an adjustment, so it has to be entered in the inner column, 40,000 minus 2,000. That is, just we have to consider the new reserve, the adjustments given in the adjustment, that is new reserve, provision for bad debts. We should not consider the amount which is related to bad debts and new, that is old reserve, which is given on the credit column of trial balance. Just we have to consider the adjustment amount, that is new reserve, 4,000 minus 2,000, 40,000 minus 2,000, 38,000. Next, closing stock given in the adjustment, 40,000. Bills receivable 10,000. Next, plant and machinery 60,000 plus appreciation, that is given in the adjustment, that is appreciation on plant and machinery at 10%, 60,000 plus 6,000, 66,000. Next, in the adjustment they had given rent paid in advance, that is 500. The total of both the sides, that is asset and liability side, should be same, that is 1,61,500. So you can score 12 out of 12. Prepare statement of profit or loss account and revised statement of affairs. First, let us know the meaning of single entry system of bookkeeping. It is a system of bookkeeping where we will record any one aspect, either receiving aspect or giving aspect. At the same time, this system of bookkeeping is also known as unscientific method of bookkeeping or incomplete method of bookkeeping. In order to prepare revised statement of affairs, first we have to prepare combined statement of affairs in order to calculate opening capital and closing capital. Before the preparation, first we have to write in the books of Kaur as on 31st March 2016. Step 1, combined statement of affairs as on 1/4/2015 and 31st March 2016. In combined statement of affairs, we will calculate opening capital and closing capital with the help of opening assets and closing assets along with liabilities on the both the dates. In case of combined statement of affairs, we have to enter each and every asset on the asset side, that is opening balance and closing balance on the right hand side of the balance sheet. That is, see here, cash in hand, bank balance, stock, debtors, bills receivable, furniture, buildings and machinery. That is on the right hand side of the statement of affairs. It is similar to balance sheet. See here, opening date and closing date. On the left hand side of the statement of affairs, we have to record the liabilities, that is creditors and bills payable on the both the dates, that is opening and closing date. Here, first we have to total assets on the opening date. It comes to rupees 2,55,000 minus 70,000, that is opening liabilities, that is 2,55,000 minus 70,000 comes to 1,85,000. It is known as opening capital. It is the capital which is calculated with the help of opening assets and opening liabilities. Asset minus liabilities, it is an equation, that is asset minus liability. Asset minus liability, it is 1,85,000. Next, we have to total the total of all closing assets, it comes to rupees 3,15,000 minus 70,000. Closing liabilities, 3,15,000 minus 70,000, 2,45,000. It is a closing capital. That is asset minus liability equal to capital. To opening asset minus opening liability equal to opening capital. Closing asset minus closing liability equal to closing capital. It is the first step in the single entry system of bookkeeping. Step 2 of statement of profit or loss. It is the statement which is prepared to calculate profit or loss. The format of statement of profit or loss is closing capital, that is we had calculated in the step 1, that is statement of affairs, 2,45,000 plus drawings. In the adjustment they had given, during the year he had withdrawn rupees 500 per month. 500 per month means into 12, that is number of months in a year, 500 into 12, 6,000. 2,45,000 plus 6,000, 2,51,000 minus additional capital. They had given, he had invested rupees 5,000 towards business, that is 5,000 has to be deducted. 251 minus 5,000, 2,46,000 minus opening capital. We had calculated in the step 1, 1,85,000 comes to 61,000, that is gross profit. Next, minus expenses and losses. In adjustment number 1, they had given bad debts amounted to rupees 2,000 and a further reserve at 5%. Bad debts is an expense, so it has to be entered in expenses and losses, 2,000. Reserve for bad debts. When they had given both the adjustment, that is bad debts and reserve for bad debts, first we have to consider bad debts. Next, while calculating reserve for bad debts, debtors, that is closing balance of debtors minus bad debts, it comes to 58,000 into percentage of RDD, that is reserve for bad debts, 5%. 58,000 into 5% comes to 2,900. Next, depreciation on furniture and machinery at 10% and 5% respectively, that is depreciation on furniture. Say, consider opening balance of fixed assets for adjustment and closing balance of current assets for current liabilities. Any adjustments on current asset should be calculated on the basis of closing balance. Any adjustments on fixed assets should be calculated on the basis of opening balance. Fixed assets, that is furniture and machinery, are fixed assets, so it has to be calculated on the basis of opening balance. 15,000 into 10%, 1,500. 40,000 into 5%, 2,000. Next, outstanding salary, it is an expense, so it has to be entered 2,000. The total of all expenses comes to 10,400. 61,000 minus 10,400 comes to 50,600. Plus incomes and gains, that is appreciation on building. Building is a fixed asset, so it has to be calculated on the basis of opening balance. 60,000 into 20%, 12,000. Plus prepaid rent, that is 4,000. Total of all incomes comes to 16,000. 50,600 plus 16,000 comes to 66,600. That is, first we have to calculate this step, that is closing capital plus drawings minus additional capital minus opening capital. It is considered to calculate gross profit. After calculating gross profit, we have to consider the other expenses and income, total expenses and total income, in order to calculate net profit. Step number 3, revise the statement of affairs as on 31st March 2016. It is similar to balance sheet in the final accounts, that is liabilities amount, assets amount. On the liability side of the revised statement of affairs, we have to calculate the capital adjustment, that is opening capital plus additional capital plus interest on capital plus interest on additional capital plus net profit minus drawings minus interest on drawings minus net loss. Here opening capital we had calculated in the first step, that is 1,85,000 plus additional capital 5,000 they had given in the adjustment. Next, they had not given any adjustment related to interest on capital. So, next, net profit 66,600. Total of all this comes to rupees 2,56,600 minus drawings 6,000. It comes to rupees 2,50,600. While preparing a revised statement of affairs, just consider the closing balance of assets and liabilities. That is, closing balance of creditors rupees 30,000, closing balance of bills payable rupees 40,000. Next, in the adjustments, they had given outstanding rent 2,000. On the asset side of revised statement of affairs, just consider the closing balance of assets and liabilities while preparing revised statement of affairs. The closing balance of cash rupees 20,000, bank balance 30,000, stock 50,000, closing balance of debtors 60,000. Next, there is a related adjustment, that is bad debts 6,000. Next, reserve for bad debts 2,900. Deduct these two from closing debtors, it comes to rupees 55,100. Bills receivable 40,000. Furniture, that is 15,000, minus depreciation 1,500, it comes to 13,500. Buildings 60,000. See, there is an adjustment known as appreciation. Appreciation is nothing but temporary increase in the value of a fixed asset. Increase means it has to be added. So 12,000, 72,000. Machinery 40,000, closing balance of machinery 40,000 minus depreciation. Depreciation is an permanent and gradual decrease in the value of a fixed asset. Decrease means it has to be deducted. So 40,000 minus 2,000, 38,000. Next, they had given prepaid rent. Prepaid means the expenses which is paid before the due date. So it has to be entered on the asset side of revised statement of affairs 4,000. The total of these two, that is assets and liabilities, should be same, that is 3,22,600. If you prepare these three steps, that is combined statement of affairs, statement of profit or loss, and revised statement of affairs, you can score 12 out of 12. That is, it is an incomplete method of bookkeeping where we will record any one of the aspects and there is no need to write any debit or credit on left and right hand side of the statements. It is these three are statements, they are not an account. In case of account, you have to write debit and credit on left hand side debit and right hand side credit. These three are statements, that is combined statement of affairs, statement of profit or loss, and revised statement of affairs. So there is no need to write any debit and credit on the sides of the statements. Next, part D. Here you have to answer 2 questions out of 3 questions which carries 5 marks each. Draft and accounting cycle. Accounting cycle includes 5 stages. First one, see here, you have to know the business transaction. Business transaction means any transaction which involves money or money's worth, or it is an activity which involves money or money's worth. Next, after considering the business transaction, next you have to pass necessary journal entries, or we have to prepare subsidiary books. Journal entry is a primary book, or it is the first book where we will record each and every business transactions in a chronological or ascending order. Or we have to prepare subsidiary books. Subsidiary books are the books where we will record similar transaction in a single book, that is purchase book, sales book, purchase returns book, and sales returns book. After preparing the journal or subsidiary books, next we will prepare ledger. Ledger is a book where separate books are maintained for separate transactions. Next, after preparing the ledger, we will prepare trial balance. Trial balance is a statement which is prepared before the preparation of final account in order to rectify the errors or mistakes, if any, or it is a blueprint of final account. Next, final, that is final accounts. It is the account which is prepared on the year ending date to calculate profit or loss, and financial position of the concern. These are all the 5 steps of accounting cycle. You have to draft this accounting cycle, that is business transaction, next journal, ledger, trial balance, and final accounts. After drafting this accounting cycle, you have to mention any 2 meaning, that is journal meaning, ledger, or any of the 2 meanings. That is, we have to mention this process of accounting cycle with 2 meanings. Next, prepare a specimen of invoice. Specimen of invoice means here you have to draft a bill like this. In the invoice, you have to mention the name of the seller, including a TIN number or registration number if required. Next, date of sale. Next, you have to draft a format like this: date, that is date, next serial number, particulars, quantity of goods, rate per quantity, and total amount. You have to mention any 2 to 3 transaction, that is question number 1, you had purchased the goods, quantity, rate per quantity, next total amount. In case of invoice, you have to consider only trade discount. Trade discount is the discount which is allowed on bulk purchases in order to increase the percentage of sales. After the transaction, you have to total the total amount which has to be received. Next, it has to be mentioned in words. See here, they had mentioned in words. Lastly, you have to put the signature. This is the invoice format. You have to prepare invoice with imaginary amount. You can write any amount you wish, but the total should be correct. This is the format of invoice. Next, draft a specimen of bills of exchange. That bills of exchange. It is a document which is prepared by the mutual consent of both the parties, that is the drawer and the drawee. Drawer is the person who prepares the bills of exchange, but drawee is the person who accepts the bills of exchange. It is a document which is prepared for a maximum of 3 months, that is a period of 90 days, if required a grace period of 3 days. See that it has to be stamped, date of preparation, that is the date of preparing the bills of exchange. Next, see here, it is prepared for a duration of 3 months. You have to mention the amount for which it has prepared. Either it may be 20,000 or 30,000 or 50,000, whichever maybe you have to mention the amount. Next, you have to mention the name of the drawer, and it has to be signature by the acceptor, that is the drawee. It is the bills of exchange. It is a contract between the 2 persons, that is the drawer and the drawee. You have to mention the date of preparation, duration for which it has been prepared, a maximum period of 90 days with a grace period of 3 days. You have to mention the amount, and it has to be signed by both the parties, that is drawer and the drawee. That is mainly it has to be signed by the drawee, that is acceptor of the bill.